It's that time of the year when most people decide to show one another love through buying them gifts like ugly sweaters, bad perfume, and discount electronics. Personally, all I want for Christmas are a few minutes of baby-making activities and anything that will make me more money. In today's episode, I'm going to offer up 3 gifts that you can give for Christmas that can help grow wealth rather than wasting your money on things that will end up in the trash. Today, we're talking about stocks for Christmas. If you watch this video to the end, I'm going to offer up 3 stocks that will fit a range of budgets and have potential for long-term stability and growth. On this channel, I discuss living globally along with business hacks in real estate and healthcare, showing you the path so you can do the same. My name is Carl Pierre, and this is ENTP Life. Most Americans' only exposure to the stock market is through retirement accounts such as IRAs, 401ks, and 403bs. They really don't know what's going on other than the market is strong or there's an economic recession. The issue with retirement accounts is they restrict how much money one can contribute a year and penalize you for accessing profits before retirement. I've been an active trader in the stock market since 2009. I mentioned that I've been a stock trader since 2009, and it's important for me to tell you the difference between stock trading and stock investing. Stock trading is taking advantage of short-term gains and regressions in the stock market, extracting some value from the minor changes in stock price. For example, I may anticipate that a stock is going to grow maybe 10% in the next week or two. So I'll buy that stock at $100 a share, expecting it to reach $110 a share in about 1 or 2 weeks, right? If I see that it's positioning and setting up for that. That is what a stock trader is looking for, these short-term gains, quick realizations of profits. Now, investing is entirely different because there's multiple strategies that people use when investing in all kinds of financial products or any kind of asset class. What people are looking for when investing is some sort of long-term rate of return. And they're going to be looking for price appreciation when it comes to stocks. Some people are only looking for dividend distributions when it comes to owning stock. So it's important for you to know the difference, that there is a difference between what I do on a day-to-day basis when it comes to the stock market and how most people are looking at the stock market. Most people fall into the range or group set of investors where they're buying stocks for some sort of long-term rate of return, whether it's through dividend distributions or just the growth of that company and growth in the price of that stock. It's no secret that being a successful stock trader allows one to generate a solid income, oftentimes between 6 and 7 figures annually. To be quite honest, it's really hard to do and it's not for everyone. However, there are options for everyday people to build wealth in the stock market. If you were to look at the history of the S&P 500 over the past 90 years, you'll see that the S&P 500 has grown by an average rate of around 9.8% to 11% per year when you take the average across time. That's going to be the boom and bust periods overall. So if you think about what the rate of inflation is in the United States, which is on average 3 to 4% per year, by just investing in the S&P 500, or what we generally refer to as the market, you'll have exposure to outperforming the rate of inflation in the United States while seeing some sort of compound effect on your money. If you have a strategy where you're consistently putting money into the market, whether it's going up or down, and over the trajectory of time, there's going to be a 10% yield year over year, you're going to be able to see quite impressive results if you're in a long-term cycle or over the long term where there's that net gain of 10% per year. If you were to look at that on a compounded basis and you started to do the math, you'll see how quickly that starts to add up. This next graphic demonstrates what would happen if you were to put in $1,000 in the stock market every year for the next 30 years, assuming that 10% of growth. Let's say you wanted to redo this graphic and put $2,000 in, or $3,000, or even $10,000 a year. What will be the net outcome? Imagine you started to do that with your children from the time that they were born. What sort of setup would you have for them in the future, even if it was for the first 18 years of their life, where you're making these contributions in their name, on their behalf, so that you're building their wealth over the long term? It's without a doubt that the earlier you begin to invest and do this, the faster and earlier in life you'll achieve great results. So rather than give valueless gifts, here are 3 gifts you could give your kids or loved ones for the holidays. The first thing you need to consider is education in the stock market. Like the proverb says, if you teach a man how to fish, you feed him for life. But if you give him a fish, you only feed them once. My recommendation for learning how to invest in the stock market is the book How to Make Money in Stocks by William O'Neill. This book teaches you how to use both technical analysis and fundamental analysis to pick good stocks to invest in, and when is the best time for you to sell your stocks to earn a profit. When I first started trading stocks, I was introduced to two books. One was How to Make Money in Stocks by William O'Neill, and the other was Tool and Tactics for the Master Day Trader by Oliver Velez. Since we're not talking about day trading, I decided to leave that book out as a recommended guide. However, that book teaches something that's really fundamental about investing in the stock market in general, which is trade management and kind of keeping control of yourself, because that's where people really lose the battle when it comes to investing in the market. They can't handle the regressions or the dips in the market, and it makes them do really stupid things with their investment, like take it out too early or buy even more of a dying stock. So that might be a secondary book that if you actually take this seriously, you might want to read, because it really teaches trade management and managing of the trader themselves. But How to Make Money in Stocks by William O'Neill is really cool because they tackle both schools of thought when it comes to investing in the stock market. There's one school of thought that is technical analysis. And technical analysis is literally this looking at the price charts and determining whether or not there is increasing demand for a stock versus supply, and that's it. It's really just observing the supply and demand chain of a particular stock, as well as institutional investing in that particular stock. So they cover how to visualize the stock market and understand those things. But the thing about this book that I really love is that they also go into the fundamental analysis. Why do institutions buy certain stocks? Is it accelerating earnings, accelerating profit margins? Are they entering a new industry? Is there more institutional activity and accumulation of stock within a particular stock symbol? By understanding both the technical side of investing in stocks and the fundamental side of investing in stocks, you'll understand why the stock's price is going up or going down and be able to make decisions based off of that. So I think since it covers both the institutional side of things and the kind of trader side of things, it gives you a good foundation of how you should be approaching the stock market, as well as how to manage your trades. The resource is really phenomenal. It's a pretty thick book. It's kind of a dry read, but when you're reading through it and you're comparing it to actually what's happening in the stock market, things will start to make way more sense to you. And the fact that you're looking at both schools of thought really helps you have a very rounded perspective on the stock market itself. The second gift would be to open up a brokerage account on the behalf of the person that you're giving a gift to. They'll now have access to this wealth building mechanism. My preferred brokerage is TD Ameritrade, and I use the Thinkorswim platform. When I got started in trading in stocks, I was using a system called Lightspeed. And Lightspeed was really designed for day trading, fast executions, really being in trades for minutes at a time, right? That's not the type of platform that you need as a long-term investor. But I do think that the tools that are available to day traders are really good for analyzing what's going on in stocks. So I found another stock trading platform at the time that I started day trading called Thinkorswim. And Thinkorswim, what they did was merged the speed and the technicals that are associated with professional stock trading into the platform of a long-term trading account. So it really allows you to look at things from a technical standpoint, and also have the support and consistency of a large brokerage like TD Ameritrade. Whenever anybody comes to me about, hey, I want to learn how to trade stocks, or I'm looking to invest or start my own stock portfolio, I tell them absolutely download Thinkorswim. That should be your brokerage of choice. I like the tools. I really don't stray from that. I never got into Robinhood or any of the other platforms. Thinkorswim is the platform for me because it covers the technical side and it's a really good brokerage. Another reason why I recommend Thinkorswim is because it pairs really well with the book, How to Make Money in Stocks. In How to Make Money with Stocks, the first bulk of the book is going over historical charts that had done phenomenal. So they try to teach you the technical analysis first. It's important for you to pair that technical review with an actual trading platform so that you can get used to looking at those historical charts and seeing the same thing with your own eyes that they're showing you in the book. The last gift you could give is the deposit of cash into their account or buying them their first stock. I selected 3 stocks in 3 different price ranges that I feel have potential and are historically stable and well-run companies. Those 3 stocks that I would recommend are Apple, JP Morgan, and Coca-Cola. Apple gives you exposure to the tech industry and is currently priced at under $200 a share and is a proven industry leader. JP Morgan is a steady performer for as long as I've been a trader. As a bank, they are conservative and well-run, and today's price is $166 a share. Lastly is Coca-Cola, which is another stable, well-run company that gives you exposure to the food and beverage industry. Each of these stocks can be had for under $250 and would make an awesome gift with the potential of giving out dividends in the long term or price appreciation. I also have one more stock in mind that I feel is poised for a legendary run, and that stock is Airbnb. As a disclaimer, remember, I'm just a guy on YouTube, and you shouldn't necessarily take my advice as professional advice for investing activities. Investing in the stock market carries risk, and the best way for you to manage that risk is to educate yourself and also to work with professionals that are licensed to do so. If the feedback of this video is positive, I'm going to go a little bit deeper into how I approach investing. Don't forget to check out my series on investing in the stock market so you can get an idea of some of the basics. Thank you again for joining me here at ENTP Life. If you think there's anybody that can benefit from this video, please feel free to share it. Until the next one, take care.